Hey guys, welcome back to the Crypto Explorer channel. Today we're taking another look at ReHold.io. This is my second video about this platform. I think it's super beginner friendly for people who want to start to operate with concentrated liquidity. I did a full-on breakdown of this same protocol yesterday. It's going to be a more broad overview, all the things they offer alongside with the upcoming airdrop. If you want to check that out, I will link it down in the description for you to see, because in this video we'll focus specifically on strategies. Alright, now they have three main options. Let me break those down really fast. Dual is their concentrated liquidity pools. The ones they're showcasing here, they all operate with big exchanges like PancakeSwap, Uniswap, QuickSwap, etc. The swap feature will allow you to swap tokens just like a regular DEX, and the buy feature will allow you to on-ramp crypto with fiat. Whatever fiat currency you have, you can buy crypto here with their platform. And from there on, you can start operating with their duals. Now there's a ton of chains, 9 in total. You can also use filters here for specific assets, from stables to blue chips like Bitcoin and Ethereum. But they have a wide range of liquidity pools, because what they call duals is nothing other than a liquidity pool. And they have two staking plans, very short term, 12 hours or 24 hours. Now for the sake of this video and discussing strategies, I like to keep it real, and if you're a newcomer, let me share with you. I would say, in my personal opinion, not financial advice, the best way for you to get acquainted with liquidity providing would be with the stable coin paired with a blue chip asset, in this case Bitcoin or Ethereum. Those for me are the staples in a portfolio because they are less risky than others. There's going to be the risk of impermanent loss when providing liquidity, but if you're going with a blue chip paired with a stable coin, that will be much harder for you to get afflicted by. And for the sake of this video, I think it also is much more easy to understand if we have a blue chip asset paired with the stablecoin, just for the sake of explaining what's going to happen after you deposit. So let's go here with Bitcoin paired with USDT, for example. And by the way, you can just use this to browse through all chains. Now, all chains are selected. It's showing me results across the board from all these 9 chains that they have. If I want to narrow this down, I just have to click the specific icon of a specific blockchain, and from there on it will filter everything out, okay? If you're wondering, BTCB, is it the same thing as Bitcoin? BTCB is the token version of Bitcoin, but on the Binance Smart Chain. It's issued by Binance and it's pegged 1-to-1 Bitcoin, but theoretically it's not really the same thing as Bitcoin. But if you want to hold Bitcoin on the BNB Smart Chain, this is the token to go for, okay? Let me just get that out of the way in case someone is wondering about it. Now, the APR that you see here, it's going to be fixed. Once you get in, you deposit on a specific pair, you're going to get this APR. Okay, so let's go in with Bitcoin paired with USDT. All right, once you commit to the pair specifically you want to invest with, and you can go with multiple duals, of course. ReHold doesn't cap you at any point. If you want to go with 1, 2, or 10, you can go with whatever amount of duals you want to go with. But once you commit to one, you then have to choose a staking plan from the two options, 12 and 24 hours. The APR might differ a little bit, which is the case right now. As you can see on screen, there's roughly 1.5% difference between the both of them. They will usually be very close, but if you find it would be worth it, you could do also choosing, for example, right now 12 hours is the higher APR, so you could commit to this one and then click the auto replay, because what happens with auto replay is just that. It recommits to your position once again once it has been closed, and it just closes automatically when the locking period comes to an end. Then you have to choose which token you want to commit with, and you will only be allowed to choose the tokens which are in the pair, in this case Bitcoin or USDT. That will play a role on your strategy, and we will check that later on. But right now let's focus here on this diagram to showcase how everything will work after you commit to a specific position. And by the way, you can toggle auto replay on or off, and the same thing with limit duals. Even if you have already established your position, you can operate with these options at any point in time. Therefore, if you change your mind in the future and you want to turn them off before they kick in, yeah, you can do that. Now, looking at the diagram here, let's click the question mark because it shows us a little bit more detail of what's going to happen. But there's going to be price ranges when we provide concentrated liquidity. The thing is that ReHold takes that out of the way. You don't have to set minimums or maximums of your range. That's already something which is set in place because of the APR. If you are familiar with concentrated liquidity, you know the tighter your range is, the higher the APR will be, and vice versa. So the wider it is, also the APR will be lower. Also, what happens with concentrated liquidity is that you provide both tokens. So when you start a position, unless you're setting something out of range, when you are starting a position for the current price range, you will see that you will have to deploy liquidity with both tokens. Usually it will be 50-50, but also you can change that manually depending on how you are anticipating the markets to move. But in here, you don't have to worry about none of those things, simply because, like I said, ReHold already has that dialed in for you. You just have to deposit and that's a done deal. Now, the focus point here is the entry price, because when your staking plan comes to an end, at that moment, if price went up regarding your entry, you'll get paid fully in USDT, and if the price goes down regarding your entry, you'll get paid fully in BTC. So this operates just like a concentrated liquidity pool. If you are familiar with that again, you know that's how it works. If the price moves down and you go out of range for the bottom end, you get paid fully in Bitcoin. If the price moves up and you go out of range for the upper end, you get paid fully in USDT. In the meanwhile, while you are on range, the position is generating fees. And in this case here with ReHold, those fees also account for the profits. So when you receive either be it USDT or Bitcoin, you always receive more than when you deposited because those rewards already account for the fees generated. Now let's look at the differences between going in with USDT or Bitcoin. This is something you can get more info on their docs. I will link those also down under in the description for your convenience if you want to check it out. It's a simple read and I highly advise you to do so. But there's a catch here, and that's why I want you to understand how it works. Now, each token, it will play a role in the strategy that you have defined. If you want to time the markets, if you want to anticipate what's going to happen, this is very crucial. So let's say you want to go in with Bitcoin. Why and when would you do it? The best approach would be going in with Bitcoin if you are thinking the market will go down, if Bitcoin price will be going down, because in that case, let's say you would go in with one full Bitcoin and price of Bitcoin goes down. Now you accumulated Bitcoin. You notice here how the total received is higher than one Bitcoin. It's 1.001861. So you just accumulated Bitcoin. Congratulations. And right now, although you do have more Bitcoin, it could be the case that since the price went down, your higher amount of Bitcoin is still worth less than the amount that you started investing with. That could be the case. But if that's the case, just hold. Wait for another price pump in Bitcoin. Wait for it to just meet your entry price at least, and you'll be at a profit. That's another reason why I suggest you should start with this blue chip asset paired with a stable coin. Because after all, these are blue chip assets. In my opinion, sooner or later they will pump in price, so you shouldn't be in a hurry to sell them. But that's just my personal opinion about it. So to sum it up, if you think the market is going down, go in with Bitcoin. Because let's say Bitcoin makes 2x since your entry. Now your profit is limited to $121 in USDT. And that is because, again, since we are playing with concentrated liquidity pools, when you commit to these plans, you're saying, okay, if the price goes up to this range, sell all my Bitcoin and trade it for USDT. That's basically what you're saying. So that's the catch that you need to look out for. And in that case, if you predict the market to go up, you should go in with your USDT, your stable coins. All right, if there's something you need more clarification on, feel free to let me know down in the comments. I'll get back to you as soon as I see your message. Now let's touch on limit duels. Simply put, limit duels are just the same thing as you providing liquidity within a specific range which is not yet met. In the meanwhile, your funds are sitting there waiting for that price to be met, and when it does, yeah, it kicks in. And the same thing happens here with their limit duel option. When you turn it on, you can set your target price, you can see the distance, and if you click here the icon, you can just swap it between upper or lower 5% range. You can also change the 5% range manually to 1, 2, 3 or other amounts. The same thing for target price here. You can set manually your specific price you want. And although they don't mention it specifically on the docs, I would assume that whenever you trigger your limit duel, you'll be getting paid with the APR that you are looking at the staking plan of your choice. Now let's quickly take a look at another example here. It's Bitcoin paired with another volatile asset. In this case, it's Atom. And notice how in this pair you have Bitcoin placed in a different position. So before we saw Bitcoin being the first ticker, which they call the base ticker, and USDT was the outer ticker, the second one in the pair. Now it's the opposite. Bitcoin is the second one. So Bitcoin is the outer ticker and Atom is the base ticker. If you look at the diagram once again, base ticker is the one which is lower and the out ticker is the one which is higher. So if price goes up, depending on your entry, you get paid with the outer ticker, and if price goes down, you get paid with the base ticker. In this particular pair, also the example goes to show you that if you predict the market to go up and you want to accumulate Bitcoin, then yeah, go in with Bitcoin. Because if the price goes down and if you go in with Bitcoin, now your Bitcoin suddenly is turned in 100% Atom, which might not be a bad thing. It depends on your strategy. Maybe you think Atom will outperform Bitcoin. And if that's what you think, well then use ReHold to your advantage then. Let me just show you their docs when it comes to the strategies tab. This is what I will link down below, so if you want to go and read it, feel free to. So there's going to be beginner strategies, also pro strategies. But overall, you'll see they work just the same. And once you understand how this operates, I'm pretty sure that you could start yourself operating manually with concentrated liquidity pools. Alright guys, before wrapping it up, let me just mention, feel free to check the description for all useful links for ReHold, for their docs, and also my initial overview video of the ReHold application. That being said, thank you for watching. Reach out to me on the comment section if you have any questions or if you just want to say hi. That being said, take care, stay safe, you know how crazy crypto can get, and I'll see you on the next one.